Okay, everybody, here we go. It is Monday, September 12th, 2022, the beginning of another week in the Freak Show. However, you and I, right now this morning, are starting to see a phenomenon play out that I've been talking about since the end of last week. I spoke about this yesterday in my Markets A Look Ahead segment. What did we just find out? European Central Bank stands ready. They stand ready to reliquefy the banks, and the Federal Reserve, of course, is going to follow suit. But let me give you a little hint, a little clue on something else here. These central banks stand ready to bail out any industry that needs to be bailed out, and they want to. Central banks want to bail out whoever they got to bail out, issue more cash, more debt. That's the way it is. I wrote a whole piece on this yesterday. I sent it out in my free newsletter, link in the description of this video, so check that out if you haven't just yet. So what's going on here is the promise that central banks are going to reliquefy the banks and pretty much every other industry that needs it. This is driving the dollar lower. All right, this is good for commodities. Okay, commodities are priced in dollars. Okay, that's just the way it is. Okay, get used to it. And a lot of these commodities are involved in an upside down scheme where the hard asset derives its value from the derivative. You know all that. This is how they keep the price of precious metals rigged. That's just life in the big city, as my dad used to say. So anyway, so right now we have a dollar this morning, markedly lower. All right. Now, I have covered recently, we talked about this right here, that if they can weaken the dollar, and they're going to, okay? The relative strength of the dollar has gone parabolic, okay? No surprise either. We discussed that here on this blog over a year ago, where we came to the conclusion, both of us, you and me, all of us together here, that the comparative strength of the dollar would continue to rise. The dollar is still viewed or thought of as a safe haven asset. We've had this global sell-off in debt. Well, we already understand the debt market is illiquid, and that is causing instability here in the debt market, gyrations here in the 10-year yield, clear signs of instability. Now, in the article that I wrote yesterday, and I've been speaking about this here, central banks, in order to keep the scheme going for now, must somehow, stabilize the debt market here. They're already in here buying the debt. European Central Bank has already made no secret of this, all right? They're buying unlimited amounts of debt across the entire Eurozone. The Fed is doing the same, okay, even though there's no announcement here. They're doing the same. Now, the market got giddy. Oh yeah, when it found out that there's the possibility of more easy money, bailouts for banks and any other industry that needs a bailout. So, in my view, this may be enough here to weaken the relative strength of the dollar, stabilize that 10-year yield, or prevent global bond yields from rising. You know how this works. Global bond yields rise when debt sells off. You understand? The market's already illiquid. It needs more liquidity, okay? So we don't want to see this selling off unless, of course, they want to let this whole thing implode. I know there's a lot of you that would like to see it implode. I can't say that I'm against that. We need something to happen here. But however, realize something. The implosion that is going to occur, by design, is going to issue in a new system of maximum control. So be very careful about what you wish for. Your wish is going to come true, but what will come out of it is something you're not going to like at all. A completely cashless system, the monitoring of every single transaction down to the thousandth of a cent, to the 10,000th of a cent here. Lots of control. And I don't think it's going to be a pretty system at all here, a cashless system. But anyway, that's been in the works for a very, very long time. So again, be careful what you wish for. But what we are seeing here, at least this morning, is again, dollar coming down, 10-year yield dropping just a shade because of the promise of bailouts for any industry, not just the banks, okay? Not just the banks. I want you to keep this in mind here. So on the back of that, what do we have? I was writing some stuff down again. Bitcoin over 22,000, okay, looking all right. Gold and especially silver, markedly higher. Crude oil higher. Why? Dollar is weaker. As I just said, these things are priced in dollars. You all know that. Stock futures are higher right now. Trading doesn't start for about 36 minutes from the time I am doing this video blog. Okay. Watch that 10-year yield today. Watch the relative strength of the dollar. Or better yet, watch the MMRI, which uses the dollar or the relative strength of the dollar. 10-year yield throws this into a neat little equation, come up with a number. I would expect the MMRI to drop. The Mannarino Market Risk Indicator, free to everybody, link in the description of this video. Color-coded, you can't make a mistake. It's so freaking easy. You understand? Okay. So with that said, that's where we stand. People, let's put a couple of other things into perspective here. All right. We have a global economy which continues to crater faster. We have inflation that continues to surge higher faster. It's not going to stop. This inflationary environment, all right, I want you to understand what I'm talking about. And I wrote about this yesterday in that piece I sent out in my newsletter, free to everybody. Okay. Understanding the situation here, that central banks are going to bail out whoever they got to bail out. Understanding that our so-called policymakers are going to look to the central banks to fund whatever they want to throw at us. Pulling more cash into the now. Central banks buying more debt. Central banks reliquefying any sector of the market. This is inflationary. They're going out of their way. Central banks are going out of their way, colluding with policymakers around the world, okay, to continue to inflate. They continue to inflate. And, you know, look, you turn on the propaganda ministries here, and they're pushing the narrative, obviously, you know, every moment that they possibly can, that central banks, they are really serious about fighting inflation. As a matter of fact, they're so serious about fighting inflation, they're going to continue to do the same thing that they've been doing now for many, many months with no result at all. Inflation continuing to rise, but they're going to continue doing that because they believe that eventually or now it's going to work. The ECB is convinced that this time, because they just raised the overnight rate 75 basis points, now it's going to work. Now, that's the big talk lately, too. All right, let me give you a little heads up on this. So, you know how it works. The Fed follows up the ECB all the time. Okay, ECB moves, Fed follows. All right. Now, ECB just put out their largest rate hike here, 75 basis points ever. Now, there's a lot of talk as to what the Fed's going to do moving forward at their next FOMC meeting. I believe that we're going to see a 75 basis point hike, but it's not going to work. Imagine Greg Mannarino shock. No, you're going to hear the same rhetoric and the same bullshit. All right. This time it's going to be different. No, it's not going to be different because central banks are going to continue to inflate via any mechanism, colluding with their respective governments. The central banks are the government. They control the financial system. They control the world economy. Everything else is just theater. You understand? So let's summarize real quick. We have, again, the promise of bailouts here, promise of more easy money, putting pressure on the relative strength of the dollar. It is somewhat, at least for now, this morning, it's started last week, seeing some resemblance of stabilization here in the 10-year yield. Our global bond yield is going to continue to rise. We're going to keep our eyes on this. I will follow this for you. I will keep you in the loop. You're going to know what's going on here. I sincerely believe that we're going to start to see this slow. we're going to start to see global bond yields stop rising. We're going to see stability here in the 10-year yield, stability here in the debt market, and a weaker dollar on a relative basis. Its absolute strength is gone. The U.S. dollar is evaporating, henceforth why we're seeing surging inflation. You understand? On the back of that, you got commodities higher this morning. Stock futures are higher as well. Bitcoin over 22,000. This is where we stand. And for those of you that continue to ask, I'm checking my email this morning. Yes, I am buying more. Ticker JEPI. Okay, I'm going to continue to buy. If I decide to not do this, I will let all of you know, like I always have in the past. When I've dumped this or I've dumped that or I've done anything, I will let you know, I promise. So just continue to follow this blog. You know exactly what's going on. All right, people, look, I covered a lot with you here today. Again, important stuff. Please comment. I will read the comments. Please share the video. Get it out there. And as usual, we're going to enjoy the freak show. I love it. And I'll see all of you at the end of the day.